Hello friends, let us discuss one question of death of partner where there is calculation of goodwill. Let us read question. Parag, Satish, Nishu were partners sharing profits and losses in the ratio of 4:3:3. Their balance sheet was as follows. Asset side, sundry assets 80,000. Sundry assets means total assets. No specific asset is mentioned over here. It means firm is having variety of assets, but all assets are not of bigger value. Therefore, it is clubbed and referred as sundry assets. They are fixed assets, 80,000. Stock, 30,000. Debtors, 40,000 less RDD, 2,000. So net is 38,000. Cash, 12,000. On liability side, capital of Parag, 40,000. Satish, 40,000. Nishu, 30,000. Creditors, 22,000. General reserve, 12,000. This is accumulated profits. This will be shared among all partners in their profit sharing ratio. Profit and loss account is surplus profit of previous years. This will be shared among all partners in profit sharing ratio. Nishu died on 1st July 2012. Here we are required to note balance sheet date 31st March 2012. Nishu died on 1st July. That means she was there in business up to 30th June. Balance sheet shows last date of last financial year was 31st March. So from 1st April, new financial year has been started. So April, May, June. These are the 3 months Nishu was there in business. Next, sundry assets revalued to 90,000. Here their value is 80,000. So it has gone up by 10,000. So this will be recorded in revaluation account on credit side, and in balance sheet will be adding 10,000 to the value of sundry assets. So new balance sheet will show sundry assets rupees 90,000. RDD was maintained at 10% on debtors. Here RDD is 2,000 already we have. Here they say 10% on debtors, that is 10% on 40,000. On 40,000, 10%, it is 4,000. Already we have RDD 2,000. So additional RDD will be required 2,000 more. This 2,000 additional RDD will be recorded to the debit of revaluation account. And second effect will be, it will be added over here in amount of RDD. That is adjustment of RDD on debtors. A provision for outstanding expenses was made for 1,000. This is outstanding expenses which are not recorded till. So one effect will be revaluation account debit, and another effect will be it will be recorded on liability side. Share of goodwill to be calculated on 3 years purchase of average profit of last 4 years. Profit of last 4 years were 20,000, 22,000, 18,000 and 12,000. Here we are required to give deceased partner share of goodwill. For that purpose, this adjustment is given. First step will be calculating average profit based on this profits given for 4 years. Calculation of goodwill. Step 1, finding average profit. Total profit divided by number of years. 20,000 plus 22,000 plus 18,000 plus 12,000 divided by 4. 72,000 divided by 4. Here average profit is 18,000. Next step will be to get value of goodwill based on average profit. Here they have said goodwill is to be calculated on 3 years purchase. 3 years purchase means 3 times of average profit. So goodwill is equal to average profit multiplied by number of years purchase. Average profit 18,000, number of years purchase 3, so it will be 54,000. Now we got value of goodwill 54,000. Nishu's share of goodwill, that is goodwill multiplied by profit share. So goodwill is 54,000, profit share is 3 by 10. So share of goodwill of deceased partner Nishu is 16,200. This will be credited to her account. Entry will be goodwill account debit to Nishu's capital account. Amount is 16,200. The deceased partners to be given share of profit till death on the basis of average profit of last 2 years. Here we are required to calculate first average profit of last 2 years. Average profit of last 2 years is equal to total profits divided by number of years. Last 2 years profit 18,000 and 12,000 divided by 2, that is 30,000 divided by 2, that is 15,000. Nishu's share for 3 months based on this average profit of 2 years 15,000. Average profit multiplied by Nishu's profit share multiplied by period till death, that is period divided by 12. 15,000 average profit, share of profit 3 by 10, period 3 by 12. So we get answer 1,125. Entry for this will be profit and loss suspense account debit 1,125 to Nishu's capital account. Till death amounted to 27,825. These are the drawings of Nishu till death. This will be debited to his capital account. Nishu's capital account showing amount payable to his legal heirs and give working of goodwill and profit. This working of goodwill and profit already we have done. Now let us prepare Nishu's capital account. We are required to open a revaluation account to find out profit or loss on revaluation. And another account we are required to open as per the requirement of the question, Nishu's capital account. Capital account of Nishu shows balance of 30,000. This will be recorded to the credit of her account. Nishu's capital account credit side by balance brought down 30,000. This is opening balance of her capital. General reserve 12,000. This will be distributed among all partners in their profit sharing ratio 4:3:3. We are required to give share of Nishu from this 12,000. It will be recorded to the credit of her capital account. So in case of Nishu's capital, on credit side we will be recording by general reserve account 12,000 multiplied by 3 by 10, 3,600. Same treatment we are required to give to profit and loss account. It is there on liability side, that means it is a profit having credit balance. Share of profit and loss account will be credited to Nishu's capital account. Nishu's capital account credit by profit and loss account 3 by 10 share, that is 4,800. Sundry assets revalued 90,000. Book value is 80,000, has gone up by 10,000. This will be credited to revaluation account. Revaluation account credit By sundry assets 10,000. RDD to be maintained at 10% on debtors. Debtors are 40,000. 10% means it comes to 4,000. Already we have RDD 2,000. So additional RDD will be required 2,000. That will be debited to revaluation account. Revaluation account debit side to RDD on debtors. Additional RDD required 2,000. A provision for outstanding expenses was to be made for rupees 1,000. This will be debited to revaluation account. Revaluation account debit to outstanding expenses amount is 1,000. Nishu's share of goodwill will be credited to her account as per adjustment number 4. We already done working for calculation of goodwill. Nishu's share of goodwill 16,200. Nishu's share of profit till her death, that is for 3 months, as per adjustment number 5. We already done working note for this. It will be credited to her account. Nishu's share of profit for 3 months. We got the amount 1,125. Entry is profit and loss suspense account debit to Nishu's capital account. Nishu's capital account credit side by profit and loss suspense account 1,125. Drawings till death amounted to 27,825. This will be debited to her capital account. With this we have done all adjustments. Let us proceed to close revaluation account. We have closed revaluation account. Total of credit minus total of debit. As credit is heavy, we got profit on debit side rupees 7,000. This profit is allocated between 3 partner Parag, Siddesh, Nishu in their profit sharing ratio 4:3:3. Share of Nishu is 2,100. It is credited over here. Now we'll be closing Nishu's capital account. When we close Nishu's capital, credit we got 57,825 minus debit 27,825. We got balancing figure 30,000. This is an amount payable to legal heirs of Nishu. It is transferred to Nishu's legal heirs account. Thus in this question we learn how to calculate share of goodwill of deceased partner in case of death of partner. Thanks for watching this video. Stay tuned with Ekeeda and subscribe to our channel Ekeeda. Thank you.